There has been a floor in the Euro-Swiss exchange rate which has been imposed by the Swiss National Bank since October of 2011, and this level was around 120. This was in an effort to protect the Swiss from their burgeoning currency, which is affecting exporters and really having a poor effect on their SMI index, of which a lot of exporters make up the constituents. Today, we got a very big surprise from the Swiss National Bank where they said they were removing this floor. And as a result, we saw the euro at one stage drop and decline against the Swiss franc by as much as 30%. So it's taken plenty of people by surprise, particularly in light of the fact that just on the 12th of this month, the S&P actually reinforced their view they would continue with this floor as a main monetary policy tool. They have a lowered inflation outlook there. There does seem to be a lower inflation outlook across the Eurozone as well. And it's become quite clear that owing to the lack of growth and high unemployment in the Eurozone, as well as low inflation levels, that the ECB is more than likely going to embark on quantitative easing this month. So to protect that floor has become a little bit too expensive for the SNB, and it would have become even more expensive had they kept it in place after the ECB decision. Certainly it is not confined to the Euro-Swiss pair. The volatility we've seen this morning has been widespread. You will see many people will have had to liquidate some of their positions elsewhere in order to fund any margin calls they would have in the Euro-Swiss or any Swiss crosses currency-wise. So also you've seen the SMI drop quite dramatically. I think we've got one stock within that at the moment that is in the red, and that's Swisscom, up about 0.5%. The rest of them are all down between 7 and 13%. In fact, one of the biggest cement mix makers, Halcyon, was down over 21% at one stage this morning. It has recovered off those lows, but this is not good news for Swiss exporters because the strong Swiss franc does seem to be inevitable in light of what monetary policy is going to take place from the ECB. We're stabilising a little bit. I mean, if we can call it stabilising, around the 102 level, but certainly we could expect a little bit more downside in the near future. But again, I think markets are probably going to wait for more clarity from the ECB, and that will give us a better idea of what type of QE to expect, how much, possibly how long for, and that will probably help us really pick where the levels can be on Euro-Swiss. Right now, given the volatility, it's very difficult to assess where the bottom or the floor could be.